Greetings from Chart Wizard, and welcome to a new edition of Markets Simplified. In this episode, we will take a technical look at the dollar index charts and the effect they can have on gold prices in the near term. The most recent development on the dollar index is important from a technical standpoint, and it can have a favorable effect on gold prices in the near term. Let us now look at the weekly chart of dollar index. There are two trend lines visible on this weekly chart of the dollar index. The first trend line represents the resistance it offered between 2014 and 2016. We have extended it, and it is evident that it has offered good amount of resistance to DXY at this point as well. Moving on, the other trend line that we take is joining the top formed at 103.85 in January 2017. This trend line further joins a slightly lower top, formed at 102.98 in March 2020. This makes a perfect case of the DXY attempting to take out a classical triple top formation. However, current price action suggests that with the prices coming below 103.70, the triple top breakout has not yet materialized. There is a strong possibility that the dollar index may retrace back to 100. And it would be even more important to see the behavior of the dollar index against the level of 100 going ahead from here. The most recent spike in the dollar led to a steep decline in gold price over the previous weeks. The yellow metal encountered a classical double top resistance near 2071, following which it saw a strong corrective decline that took the price below 1800 levels to 1788. The corrective retracement from 103.70 to 101.50 of the dollar index is likely to bring some respite for the gold prices. The precious metal has tried to put a bottom in place in the 1780 to 1800 zone, and it is looking to move higher. The recent corrective move in the gold price took it below the 10-week moving average, which currently stands at 1903. It also slipped below the 40-week moving average, which stands at 1843, but it has managed to crawl above it again. The 10-week MA is above the 40-week MA, and the immediate low point at 1788 is also multi-month pattern support for gold. This pattern support comes in the form of a rising trend line that begins from 1677 in March last year and subsequently joins the higher bottoms. Gold prices are likely to trade with a positive bias in the near term. If there is no exceptional surge in the dollar index, the precious metal may touch 1900 levels and higher over the immediate short term. The most immediate low point of 1788 is likely to act as a strong support area. If the present technical setup gets resolved on the expected lines, gold may test the most immediate resistance levels of 1900, and if this level gets taken out, then it may gain further strength, with the caveat that the dollar index stays in a defined range. We will be back again with such actionable insights. Don't forget to like this video and leave your comment. Until we return, stay tuned and stay subscribed. Thank you.